Everybody's scared that the housing market is going to fall apart, but what they don't know is that in Pittsburgh, prices have rose 15% year over year, and barely anybody's talking about it. I'm Riley Madden, a Pittsburgh real estate specialist. I work with investors, relocators, families looking to move to Pittsburgh, and we've toured about every single suburb, have been in most of the houses you see for sale in Pittsburgh, and have watched the price shifts firsthand. And we specialize in helping people win the offer even when the market looks unpredictable. And what I can tell you right now is that Pittsburgh is not doing what the headlines are saying. While other cities might have seen double-digit price drops, bidding wars dying out, and sellers slashing prices, Pittsburgh's median home price is actually going up. So today I'm going to walk you through why is Pittsburgh outperforming the national market, which suburbs are growing the fastest, and which are stalling, where I'd buy if I was looking to beat the next price surge, and what you need to know now if you're waiting for prices to drop. This video will help you stop guessing and start making strategic real estate moves, whether you're planning to buy, relocate, sell, or invest. And later on in this video, I'm going to share a completely overlooked suburb with you where homes are now selling 20% faster than last year and nobody's telling you about it. So let's start with a myth. The real estate market is crashing everywhere. In early 2023, all of the headlines you saw online predicted a market crash. Yeah, they were trying to fear monger you, they were trying to scare you, and that's what a lot of these online sources do. And you've seen rates spike up and everyone started thinking, maybe it's gonna crash, maybe I should wait to buy a house. But here's what really happened in Pittsburgh. In January 2023, the median price dipped to around $211,000. By mid-2023, it rebounded very hard, hitting around $260,000 median price in July. As of spring 2025, the average home price here sits around $270,000, even $290,000 in some zip codes. And here's what people didn't expect. Pittsburgh had the highest year-over-year growth of 15% among all US major metros. And this was from February to April of 2025. So what do you know? Pittsburgh outperforming your big Miami, New York City, all of your big major cities that people look up to when looking at housing markets. Pittsburgh, Pennsylvania is outperforming them. This is not a correction, it's something called momentum. So why does everybody think the Pittsburgh real estate market's slow? Because they're watching national headlines, not what's actually happening locally, and they don't have a local insight on the market because they don't follow it as close as real estate professionals who see every tiny upswing and every tiny downswing. As we are involved in the market, we are involved in listing properties and seeing homes with buyers, taking a look at how the prices are changing, and even the little upswings and downswings, little marks in the interest rates that tremendously affect the market, but also being in the Pittsburgh area, working in it with our family for over 30 years. We know exactly what to look out for, what areas to keep on our radar, and how significantly the Pittsburgh market has changed even over the past decade. So let's talk about inventory, the secret weapon behind Pittsburgh's stability. Right now, you have inventory down, new listings are scarce, and demand still very strong, especially in family-friendly and affluent suburbs. And why is this? Why is inventory down? Why is there no homes on the market? Well, it's because sellers are what I like to call rate locked. They got their property or refinanced at 3%, and now they're selling at 7%. What does that mean for them? Well, if they sell their house and purchase another one, they're not going to have as much purchasing power because of that interest rate difference. So most of the time, sellers like to sell their home and maybe upgrade to something bigger and nicer and better. But with their purchasing power currently, if they were to get a new home at a 7% interest rate, it's likely going to be the same or even less than their current home now. So who wants to sell a home and then get something not as desirable and not as big and not even an upgrade? not many people, and that's why they're not selling. A lot of people have instead chose to remodel or wait and tried to time the market to see if there could be a better case scenario a few months down the line. So what does this mean for you? Well, it means less homes on the market to choose from, homes that do list are getting multiple offers, and well-priced properties in line with the market can go in a few days. And what do the numbers say? Well, average time on the market in the city is around 12 days. Suburbs like Wexford and Bethel Park under contract in 10 days or less. And 20 to 30% of the homes right now are selling for above listing price. So while buyers are being more conscious, sellers are still holding the leverage. So it's the perfect storm for price stability and even some silent growth. But what does this mean for buyers? As we are working with buyers every single day, we've been through every swing in the market, writing up the most competitive offers in order to beat out the 10, the 20 other offers that are on the table. And although it depends on the property, it depends on the neighborhood and how it's priced. Some homes are sitting for a few weeks with maybe your first dibs on it. Others, over the weekend, they have 7 offers and you're going to have to compete with all of them. And this is really where you have to get strategic with the offer. It's not, you don't get represented by an agent to go let you into a house and that's it. You saw the house, now let's just make a standard offer. That's not how it works. You have to be extremely competitive. You have to know exactly what is important to the sellers and how to structure this offer to be the most competitive offer to stand out over 10 or 20. And trust me, every bidding situation we are in, if the buyer could have the stronger terms, we win, no matter how many offers are on the table, and it's the best feeling ever. Even in hot areas like Mount Lebanon and Wexford, North Hills, South Hills, we are getting these offers accepted on a weekly basis and beating out dozens of other people. And I'll let you in on a little secret why. Because although people may think offers are really just about the price, how high can you go and what are your loan terms, that is completely false. Although cash is king in a lot of scenarios, we've still beat out cash offers because of the way we've structured our terms. So even with a loan, if you're getting conventional, which is going to be the closest to cash, you could actually get that loan fully underwritten, which is basically as good as cash. You could do different things with the appraisal contingency to make it more favorable to the seller. That way, when you come in on your purchase price, the property doesn't appraise $40,000 under, and now the seller's not getting what they want, and maybe they have to go back on the market, which is not ideal. And that's their worst fear, so you have to make sure that they know that your offer is going to go through. One of the ways is an underwritten pre-approval. Other ways are appraisal gaps. Other ways are your terms on your inspections, and there's really different ways to word it depending on how many offers the seller has. So that's something that we really talk about one-on-one with our clients, is how we're going to navigate these inspection clauses, because we never recommend to waive them, but instead do something strategic there to make the sellers more at ease. And other ways are something as simple as the closing date, the earnest money deposit, and really making sure your offer aligns with the most favorable terms to the seller with as much guarantee that this deal will close as the terms say so. And there's different clauses you could put in that actually beat out other offers and will bump your purchase price up. That way you don't have to go to your max purchase price right out of the gate. And those have been extremely helpful in order to get an accepted offer and beat other offers out, where we end up getting the house for our buyers, and it is the best feeling ever. So if you're moving to Pittsburgh and you're looking to buy, sell, relocate here, make sure to reach out to us. Our contact information's up here on the screen, always in the description below. This is what we do 24/7, and we absolutely love it. And when you work with us, you'll get first access to rising areas before they've hit anybody else's radar. You get a one-on-one consultation call that will basically go over your entire goals, what you're looking for here in Pittsburgh, and how we could help match you to those areas, give you a complete breakdown on why these may be the best for you, along with a personalized property list and a 24/7 contact to go into the properties, to strategize for your offer, and to get you to the closing table. With family experience in the industry for over 30 years, you also have access to my father, who has a home construction company here for over 35 years, and access to me and my brother as a team to help you not only with all of the contacts you might need here in Pittsburgh, but ultimately to get you the home of your dreams. We also have plenty of access to share with you with off-market deals that never hit the MLS, new construction opportunities that you might not see online, and a full custom plan based on your timeline, your budget, and your goals without all of the pressure. We're here to help, not hammer you to buy something. And the truth is, if you wait on the sidelines hoping for prices to fall, a lot of times we see people paying more later on for less of a home, just because of more competition, fewer options, higher rates. It's honestly a losing game, especially when you're trying to time out little sectors in the market. Could be exhausting, and you could end up losing out on the house of your dreams. And if you listen to the national headlines thinking Pittsburgh is going to crash, you'll miss out on one of the most stable, affordable, and wealth-building markets in the country. So here's where it gets interesting. Some areas in Pittsburgh are exploding like crazy, others not so much. So let's break it down. Areas like Fox Chapel, which has a median price of about $1 million, had a year-over-year growth of around 11.3%. Cranberry Township, median price around $436,000, had year-over-year growth of around 6.2%. Wexford, median price $547,000, had year-over-year growth of around 3.1%. Mount Lebanon, $420,000, year-over-year growth of around 3%. So why are these areas booming? High-quality school districts, safe suburban fill with great amenities, and increasing out-of-state buyer interest. In fact, in Butler County, this is where Cranberry Township is, they saw the highest price growth out of all counties in the Pittsburgh area last year. But then you have areas such as Bethel Park, which is a great area, median price point $300,000, year-over-year growth around 1.8%, or Monroeville, median price $241,000, year-over-year growth of 0.4%. So these are great communities, but they're not growing as fast. Why? Well, it's often the housing stock, which could be older and not as desirable, fewer relocators, or a capped price ceiling for the neighborhood. So here's something that I see over and over again. People chase the hype zip codes, but ignore the next big thing. And right now, one of the suburbs I'm watching closely is South Fayette Township. Most people don't realize that it has A-rated schools, new development coming in, home prices still available for around $350,000, and it's now seeing homes go under contract around 20% faster than last year. This is where smart buyers are making moves. Still affordable, still growing, still early, and it's one that we recommend to a lot of clients who are looking in that area and looking for things that this area fits. So let me tell you the truth on what's keeping Pittsburgh so stable and why it's rising, despite other areas in the country not following suit. Affordability. This is a huge one, and it's one that is so important, especially to people relocating. I am on the phone with clients every single day that are coming from New York City, Texas, California, Washington, D.C., and they're all saying the same thing. I'm looking for something affordable, something that isn't going to break the bank, but still going to give me a high quality of life and potential for extreme growth here in the future, quality to schools, healthcare, parks, good amenities, and a neighborly feel. That is what I hear almost every single day. Our price to income ratio here in Pittsburgh is still very low, much better than Philadelphia, New York City, or even Columbus, Ohio. And then on top of it, you have the amazing job growth. Healthcare, tech, logistics, all growing sectors here, and AI is very much booming with a lot of AI jobs and Carnegie Mellon playing a huge role in that. I think we could all agree that AI is something that is really disrupting just how we live our normal lives for business owners, for students, for everyday people. I'm on ChatGPT every day. I use it almost in place of Google now, so I've seen the effects firsthand, and Pittsburgh being a leader in the AI world is so exciting for the next 5 to 10 years. I'm so excited to see the transformation, not only downtown, but how that affects the overall market and even our suburbs. The whole entire metro area of Pittsburgh is bound to change with healthcare, AI, tech. Those three sectors right there are going to be undeniable in the growth of Pittsburgh. And we also have a low risk of climate disaster, which a lot of other places have been suffering from, such as Florida. A lot of these places can't even get insurance anymore because of the natural disasters. So Pittsburgh is a safer bet due to insurance costs and it being very low risk. Also, we have a very stable economy. It's not a boom and bust city. We don't go as high, but we also don't fall as hard, and that's a pretty much stable trend throughout the Rust Belt cities. We are the most resilient, the most durable during these housing swings up and down. You want something stable, especially if you're an investor or a normal homeowner that just wants your properties to continue to appreciate without having to worry about losing 20% of equity all of a sudden. So what does this mean? It means if rates drop even just a little bit, these little increments, demand continues to rise higher. It's not a maybe, it's a certainty. We know that a lot of people are not selling because of their rates being low currently and them having to go into a higher rate. So keep in mind, keep an eye out on rates, and we even help our clients one-on-one, pairing them up with the best lenders in the city that'll keep them up to date on any rate change and give them the guidance on the best time to lock that rate, along with keeping an eye out on when's a good time to buy, determining these rates and the inventory being on the market. So let's talk about 2025, the rest of the year. What are my predictions on what's going to happen in the Pittsburgh real estate market? These are bold, but they're grounded. It's what we've seen and what I expect to see next based on the current state. I do think prices are going to continue to climb slowly but surely. Most analysts are predicting a 3 to 5% increase this year in the Pittsburgh market. And if interest rates drop even slightly, that number could jump. I wouldn't expect a boom, but we're talking more about steady, compounding appreciation that rewards those who are early. I do think inventory is still going to stay tight. Until the rates drop significantly enough, homeowners are not going to sell because they're not going to downgrade. They're just going to stay current in their house until you see those rates drop. But the unfortunate thing is 3% levels are pretty much unheard of. And I truly don't think we're going to see rates drop that low, but I think somewhere in the 5% mark will give people enough comfortability to go ahead and make the move they've been waiting to make and not put their lives on hold for it. But this really means that demand is going to continue to outpace supply, and competition for the good houses will stay pretty intense. And I also think the buyers are going to start flocking to these underrated suburbs. As big name suburbs like Mount Lebanon and Wexford get more expensive, the smart money is going to move into nearby suburbs that provide good access, good amenities, but the affordability and the under the radar benefits that not many people are diving into, all because they offer better value. And who doesn't like value? And I would say top areas to keep your eye on this year, number one being South Fayette Township, which is already heating up. You have faster sales, rising prices, new construction, and a lot of land. It's still affordable compared to even Mount Lebanon with similar school quality. I would expect this to be a go-to relocation suburb, especially by late 2025. Another one, Imperial or Findlay Township, next to the airport. This, you might also know it as Moon Township. It's massive growth, it's near the airport, and it's still flying under the radar. But Amazon, FedEx, and major logistic companies are putting this area on the map, so it's definitely one to keep your eye out on. Murraysville, this is east of the city, has newer builds, larger lots, beautiful nature, great amenities, and very strong schools. This is a favorite for families who want a mix of nature but also access. And some downtown neighborhoods such as Troy Hill and Polish Hill, I would definitely keep my eye on. They are still undervalued, especially compared to Lawrenceville and the Strip District. Younger buyers and investors are starting to move in, and Garfield's another one as well. They are really going to be potential appreciation gold mines if the development continues. So I would say if you're watching this video, you are already ahead of 95% of buyers and sellers out there. Most people wait for hindsight, but you're getting foresight. So now you have two choices. You could keep watching from the sidelines and hoping it gets easier, or you could lean in, reach out, and we'll get you one step ahead of the curve, especially before the next price wave hits. So go ahead and reach out. Our contact information up here on the screen, always in the description below. This is what we do 24/7, and we absolutely love when you guys reach out. We help you with every single aspect of your move and making sure you're as ready, prepared, and comfortable as possible to get the home of your dreams in the area that's going to fit exactly what you're looking for with your long-term and short-term goals, your budget, and your lifestyle. And I want to hear from you. Drop a comment what area you're keeping your eye on and what your predictions are for the 2025 Pittsburgh real estate market. And if you want to know everything else about Pittsburgh, our neighborhoods, our real estate market, and actual full neighborhood tours, you could start by watching these next videos here. And we'll see you in the next one.